Hi everyone, welcome to another video. So in this video, we'll try and understand something which was hot news 1 week back, and that is a lot of vendors in Bangalore, Karnataka removing UPI stickers from their shops and telling customers that they only accept in cash henceforth. So in this particular video, we'll try and understand what led to this complete UPI boycott, what is the current situation in Bangalore, and what could be the steps, solutions, resolutions, alternatives to bring back the digital payments or the UPI option. If you look at the headlines which were circulating a week back, it said Bangalore UPI panic explained why small traders saying no to QR and yes to cash. In fact, the entire issue happened when a vegetable vendor in Bangalore received a GST notice for 29 lakhs, and he called up a few people, and this entirely triggered a statewide UPI boycott. Bangalore as a city has always been the stronghold of digital payments, which is well known to everyone. Karnataka, in fact, is number 2 ranked after Maharashtra in terms of the percentage volume contribution in the rankings of state using UPI, or for UPI usage, it is number 2 after Maharashtra. But in spite of all of this, a lot of vendors took the approach of completely boycotting UPI and telling customers that today onwards, I will only accept cash. Now, if you look at the GST registration rules section, provisions, etc., if there's a vendor or a supplier dealing exclusively in goods, then if his threshold in a particular financial year crosses 40 lakhs, then only a registration is required. Similarly, if there's a vendor providing both goods and services, then the threshold limit is reduced to 20 lakhs. 20 lakhs of turnover, if it crosses in a financial year, he or she must get a GST registration. And if you're only dealing with services, then it's also 20 lakhs. So only if your turnover threshold crosses these limits in a particular year, you should only get a registration within 30 days of becoming liable. Now, what happened in Bangalore was that the GST departments analyzed the volume of UPI transactions for some vendors, and they reached a conclusion that from 21-22 onwards, there has been an increase in the volume of UPI transactions because after COVID, everyone was adopting the digital approach. And in a particular financial year, it crossed the 40 lakh limit of UPI transactions, and therefore they started sending automatic notices or other kind of notices to to these unregistered vendors. Now, the worry was basically that in any city, in any state, there is a GST revenue target which is to be accomplished. In fact, if you look at Karnataka, for example, the revenue target in financial year 24-25 stood at 1.2 lakh crore rupees. So this is the revenue target that is fixed to the department, saying this much of revenue in terms of GST you must collect. And therefore, till now, there's around 14,000 cases in terms of notices being sent to these unregistered vendors being reported. The fact of the matter is that, or the basic question is that, once you get a notice, should you assume that all your UPI transactions are falling in this threshold limit, or this revenue turnover limit? Well, the answer is no, because in the bunch of UPI transactions, you could have some informal loans being received, some UPI, Google Pay transactions between friends and family, which are not in the nature of sales or revenue. So therefore, in the total UPI transaction, which is, let's say, 41 lakhs, around 10 lakhs could be informal loans or money received from friends or family, some split that have happened and all that. And therefore, you'll still be under the 40 lakh threshold limit and you need not obtain a registration. So once you get a notice, it is very important to check what the department is saying is correct or not in terms of calculating threshold limit for GST registration. Well, a lot of experts say that if the GST department in Karnataka is able to get a good chunk of money in terms of GST revenue, then other states will also follow suit, because today states are in desperate need for GST revenue because there are these yearly targets which are sent. Well, what could be the steps, the solutions, the alternatives or the resolutions? Well, first and foremost is to have a good awareness about the GST rules, regulations, provisions, sections, etc. Because not all UPI transactions, like I said before, will come within the purview of revenue. Some could be non-revenue items, personal loans, some gifts being received from family members and stuff like that. And therefore, you need to calculate what is pertaining to sales, and if that crosses 40 lakhs or this 20 lakhs, then only within 30 days you must obtain a GST registration. You have an option to go for a GST composition scheme, which is basically meant for these small scale vendors, wherein you don't have to pay the usual 18% or 28%. You can opt for this scheme subject to the conditions and pay just a 1% or a 3%, etc. Using multiple bank accounts, QR codes, now you may have a business wherein you and your wife is involved in this particular shop, and you can use both the accounts to split the revenue between you and your wife. You can have 20 lakhs each and then escape registrations, totally legal. And using multiple bank accounts, QR codes could be a tested alternative in this particular case. Well, I hope I was able to make things clear through this particular video. If you like the video, you could show support to us by hitting the like button. If you want more videos like these on a regular basis through way of notification, you could also think of hitting on the subscribe button. Till then, I'll see you guys in the next video. Take care and thank you.